In today's video, I am going to be going over some beginner level stock analysis. So basically, if you're just starting to get into stocks, this is definitely a video that you're going to want to watch because I'm going to give you a couple of different tips that you can actually use when you're looking at stocks to invest in. So the first stock we're going to look at is TD Bank. I am a huge fan of Canadian banks because they pay a massive dividend. So if you are a dividend investor, then that is definitely something that you want to look at. And when it comes to dividends, if you don't already know, basically, a dividend is a bit of money that a company will give you out of their earnings. So, for example, with TD, you're currently getting 3.31%, which on, let's say, a $100 investment is around $3.31 per year. Now, something to really keep your thoughts into dividend investing is you can get different ETFs and things that will give you a higher dividend, but sometimes a higher dividend is a riskier investment, but not always. So let's keep on checking out this stock. The next thing I really like to look at, especially when it comes to riskier stocks, let's say Bitcoin mining stocks as an example, would be the average volume. You really want to get something that has a lot of volume because that's how many shares that are being traded every single day. That is the average volume over the past little bit of time, and usually it's around 30 days for most websites, and that is the current volume as of the time of making this video. So for example, at the close of December 6th, that day had 3.5 million shares traded on a down day. And the volume actually tells you quite a bit what's going on with the stock. So for example, with volume, you really want to pay attention to that because let's say you want to buy, let's say 1,000 shares of a company, but on average, they're only trading 2,000 shares per day. Well, then at that point in time, it's going to be a little bit of a riskier investment because if you wanted to offload and sell all 1,000 shares that you invested in, you may take a couple of days to trade all of those shares. But if you're wanting to buy 1,000 shares, let's say in TD, and it trades at an average of 5.5 million shares traded every single day, that 1,000 share block is going to be extremely easy to get rid of. The other way you would look at volume too is, let's say, for example, this stock in particular, it was under average volume on a down day. That usually means that that down day was not significant. If this was a 1% down day and let's say the volume was like 7 or 8 or even 10 million shares traded, that would mean that there would be something significantly wrong with the company and you need to do more research into what's going on with that company. And on the flip side, let's say there's an average volume of 5 million shares. It's up 4% today. And let's say today so far, it's had 40 million shares traded. Well, there could be one of two things happening there. Number one, they may have great earnings. There may have been a really good story that came out about them. Maybe they created something brand new and everyone thinks that's going to be the newest thing since sliced bread. So whatever it may be, that could be just a massive news story. And whenever a massive news story comes and it gaps up, that usually means it will drop a bit. However, I'm getting them a little bit more advanced at that point. However, the other side of the equation is, let's say, for example, Sundial stock a few months ago, when there was 1.5 billion shares traded in one day, and it got up to like 3 billion shares at one point in a single day on an average share volume of 500 million shares traded every single day. At that point, there was a lot of motivation into penny stocks. It was the whole GameStop trade. There was also a lot of momentum into marijuana stocks, mainly because of the U.S. government potentially legalizing it as a nationwide thing at the federal level. And there was a lot of momentum there. But also, when we were looking at it as well, it was just just insane volumes too because of the price of the stock. It was under $1 per share. And in fact, it went from around 70 cents a share up to about, I think it was $5 or $7 within a couple of days. And now it's back well under $1. So when you start trading those momentum stocks, you are now risking a lot. But how you can trade it is by, let's say, buying 300 shares, doubling your money, selling half. You've made your money back and letting the rest ride. That's personally how I trade risky stocks. Next is, if you are a dividend investor, to look at the ex-dividend date. That will give you an idea as to when the next dividend is going to be. And then, of course, there is PE ratio, price to earnings. This can only be really looked at if you're comparing another Canadian bank stock. Because if you're comparing, let's say, TD, which is at 12.23, versus Apple, that currently trades at a 29 PE ratio, you would automatically assume that Apple would be a bad investment versus TD because their PE ratio is higher, which technically means that Apple is a more expensive stock. Price of stock to earnings. However, when you do compare Apple to TD, you can't really when it comes to the PE ratio because Apple has more growth potential than TD. However, you would be investing in TD because it's a little bit safer, plus it gives you a bigger dividend if you're a dividend investor looking at dividends as an income source, maybe as a backup income, or maybe you're retiring or whatever it may be. Next is a thing called the MACD. And this is actually a very telling sign as to when a stock is about to explode to the upside or implode to the downside. So whenever this blue line is on top of, I'm colorblind, the green line, I think that's green, then at that point the stock should be rising. However, as we can see here, the green line was over top, and that's when the stock is generally going down. And we can see that when we zoom out on the chart right here. And then when we zoom into the 5-year chart over the last little bit of time, we can see that, of course, that green line was over top of the blue and the stock absolutely imploded. However, as soon as that MACD switched, the blue crossed over top of that green, we can see that there was a rise, and then it stayed over top, and then it completely gapped up huge between these periods. Meanwhile, all with heavy volume. Remember what I was mentioning, heavy volume when it goes up is good. However, we have also seen heavy volume going down. Now, when the virus hit, guess what? Everything was going down, and everything was going down with massive volume. Now, why is that important? Well, guess what? The day that is usually around the bottom is the most heaviest traded days, usually, of the year up until that point, excluding what's happening afterwards. We've seen that here. That was one of the worst days, and since then it has recovered quite nicely. Some basics: anytime you see a double bottom, usually it's going to rise, and anytime you see a double top, which we don't really see here, other than over here, is usually there's going to be a little bit of a downside. But these are extreme basics. Extreme basics. If you are a dividend investor, something else you really want to look at is the dividend, and are they increasing? And if they are not increasing, as we see here, what is the reason for it? Well, of course, with banks, what we're seeing here is they were just not allowed to at the government level because, of course, there was the virus, and the government and their watch agencies did not want to have the banks raising their dividends when they're making a killing when nobody is at work. And then the next thing that I really like to look at is their earnings. And as we can see, 2020 wasn't exactly a fantastic year. However, we can see that it was still not all that terribly bad. And just exactly how I personally predicted, they were able to make earnings the same as the previous, if not better, years, with lesser revenue. Anytime a company is going through some hard times, they have less revenue and higher earnings percentage-wise. That means that the next year is going to be absolutely bonkers and insane, as we've seen in 2021. Check that out. Higher earnings than ever before and higher revenue. That is a fantastic combination. Second is their last 4 quarters. And we can see that here they've beaten all 4 of the last quarters, 3 of which by massive margins. And then you can look at companies like Apple. They have a dividend as well. It's not as big. They have crazy volume as well. And of course, you would go through the exact same template as I just mentioned. There's a billion different ways that you can analyze a stock. One of the ways that I've analyzed the stock before is I believed in their CEO, so I threw money at them. And that was Tesla, and it worked out for me because I bought a Mustang that was originally going to be an idea for Tesla. But either way, it's a long story. But originally I was investing in Tesla so I could buy a Tesla car. I ended up buying a Mustang. But either way, I believed in the CEO, so that's why I originally invested in Tesla. Same thing with Apple. I believed in Apple, so I invested in Apple. Those are obviously ways that you can just analyze a stock. I believe in the founder, I believe in the CEO, I believe in the company, I use the company, I should just invest. Well, you can do that with a bank too. I use TD, I use many different banks. You can just use them all. So you can just invest in them all. That way, when you're paying your interest on loans or whatever it is, or you are just paying whatever fees there are with banks, you are essentially getting them paid back with dividends. But I'm going to tell you right now, it's a lot better just to keep a couple of grand in the bank account just so you don't have to pay fees, because it ends up being like saving 8% a year. So just do that. Anyways, I hope that you've enjoyed today's video. If you have, hit that like button, subscribe, and I'll see you guys again next time.